and welcome to Finextra TV. I'm Hannah Wallace and we're here at Merchants Payment Ecosystem 2020 in Berlin. Kindly joining me now is Jim Wadsworth from MasterCard.
Hi Hannah.
Hi Jim, it's good to see you
Likewise.
again. So I want to jump straight in there. Can you fill us in where we are with open banking and what we can expect from 2020?
So open banking, I mean, it's a worldwide phenomenon, but as far as Europe's concerned, really kicked off and catalysed by regulatory intervention, which, if I park the UK for a second, came into full effect at the end of 2019 with the go-live date of PSD2. The UK went live a little bit ahead of that with its own domestic regulation. How much has happened yet in terms of real activity? Frankly, not all that much. I mean, in the UK, we've seen maybe 1 million UK citizens trying out some form of open banking service. But that really isn't a surprise. This is a 10-year journey, not a 10-month journey. We're just starting. The potential is huge, but we're right at the start of that.
Sure. All right. And I'd like to hear your take on the role and sort of impact of collaboration and innovation in the merchant payments industry, but also what are some of the challenges we're seeing amongst some of the players?
Yeah. So, I mean, from a merchant's perspective, it's, you know, at one level you could say, oh God, here we go, another change, another industry innovation I need to kind of get to grips with. But actually, if you think more broadly about it, you know, what's the intent of open banking? It is about stimulating innovation and, from a regulator's perspective, equally stimulating competition between the incumbent banks and so on. So from a merchant's perspective, it means another option, another payment method that their customers may choose to use. And there will be pros and cons for different transactions. We all make different decisions when we're making a purchase between payment option X or payment option Y. At one level, this creates another one. But for particular use cases, we think open banking payments could be particularly relevant. Things like bill pay use cases, from a merchant's perspective, if their business is predicated on invoicing their customers, which could of course be business customers as well as consumers. We think that, you know, where they're today typically using bank account to bank account payments as their preferred option, we think open banking makes that a lot easier for the end user and therefore equally for the business themselves. And we think that's where the real opportunity lies.
Sure. Well, I think it's safe to say a lot of people, especially at this event, are talking about where they're seeing the areas for growth. So could you fill us in there a little bit?
Maybe if we look at what's happening in India. So India's got a thing called UPI, which has been live for about 3 years now. I looked at the stats just recently, actually, and you know, essentially what UPI does is makes it easier for merchants and other service providers to trigger payments from a bank account to a bank account. And at the last count, something like 100 million Indian citizens were using UPI regularly, and they processed in December alone 1.3 billion transactions. And that's from nothing 3 years ago. Now, from India's government's perspective, a big part of that is about catalysing the move from cash to digital. You know, for a variety of reasons to ultimately help the economy, partly about, you know, moving some of the economy from the grey to the, shall we say, more overt world, but also absolutely to catalyse the move to digital for that country. And we expect to see, maybe not quite so, you know, obviously Europe is more advanced in terms of adoption of digital, you know, and also to some degree with the progress away from cash. But actually, you know, in most European markets, probably half of domestic transactions are still cash-based. So there's a huge amount to go at, if you like. And the benefits of digital for business and citizen alike are significant. Cash is expensive from a merchant's perspective. It can be inconvenient, but also just in terms of the speed of how economies move. If money is moving in real time, account to account, that money by definition is immediately available for the recipient to use for something else. So it just speeds up the cycle time of economies, and we think that's very valuable.
And lastly then, I really want to home in on MasterCard's open banking solution and how this is feeding innovation. So can you tell us a bit about that?
So, I mean, as I hope you've gathered, we think open banking, the whole open banking phenomenon is a very positive thing. And we're very committed to help make it as successful as possible. There are things about open banking which create complexity for participants or potential participants, and we're trying to remove some of those. So, for example, if I'm a service provider or a merchant wanting to transact with the customers in a country or even in a region, I may be faced with having to build connections to hundreds, if not thousands, of banks. And frankly, that's work that is distracting for that merchant or for that service provider when they could be enhancing their existing service. So we provided a service called Connect, which basically provides a single API for that merchant to plug into, and we do all the heavy lifting of connecting up all of the different bank accounts. And we think that just helps. From a bank's perspective, it creates new risks. PSD2 is a very good thing in creating a new lower tier of regulated entity, so-called AISPs or PISPs, Account Information Service Providers, or Payment Initiation Service Providers. And the idea of that is to get the balance right between encouraging new businesses into taking advantage of these services, but without too big a regulatory burden, but still maintaining some appropriate consumer protections. That's all great. If I'm a bank, I'm obliged to provide the payment or the data to a PISP or an AISP that contacts me. That's fine, providing they are actually still regulated. But we in real time provide that bank with a validation that the entity at the other end of the transaction, if you like, is legitimate and still able and empowered to make that transaction. Because of course, permissions can be granted, but they can be taken away again. At the same time, we're doing in real time fingerprinting of what of that third party, what's normal for that third party. If I'm a bank, that's one thing. If this guy is always doing 100 euro transactions, if suddenly they kind of come along and do 10,000 euros, that's potentially a problem, because I may not know that. I may not know what's normal for this guy, but we're effectively aggregating data across the ecosystem, provide that real-time risk management for banks.
All right. Well, Jim, I think you're working on some really interesting things at MasterCard. I'm looking forward to seeing how things develop. But for the meantime, I'll let you get back to the event. Thank you for sharing your insights.
Thank you.